Ladies and gentlemen, welcome to this quick insight video on crypto asset disclosure. I'm Ross Maynard and I'm your tutor for this session. The Financial Accounting Standards Board in the United States have recently approved a new standard on accounting for and disclosure of crypto assets. Are crypto assets becoming respectable? Let's find out. Until recently, regulators have discouraged investment in crypto assets because they have no asset backing and are unregulated. Regulators are beginning to accept the reality that some organizations do hold crypto assets, and they're moving to define the disclosure that's necessary to protect investors and other stakeholders. Now, the Financial Accounting Standards Board has issued a new standard: accounting for and disclosure of crypto assets. Let's delve into that. Let's start with a definition of what the FASB mean by crypto assets. To come under the FASB standard on disclosure of crypto assets, a holding must meet the following criteria. It must be an intangible asset as defined by the FASB glossary. It must not provide the holder with enforceable rights to or claims to goods, services, or other assets. It must be created on or reside on a distributed ledger based on blockchain technology. It must be secured through cryptography. It must be fungible, meaning exchangeable for something of the same type or value. Non-fungible tokens or artworks are excluded from this definition. It must not be created by or issued by the reporting entity or a related party. FASB reporting requirements. The FASB standard comes into effect for financial year ends in 2025. The reporting requirements for organizations with such assets are as follows. The aggregate amount of crypto assets held must be disclosed separately from other intangible assets. Changes in the fair value of those assets must be disclosed in each reporting period, with gains and losses shown separately from the income statement effects of other intangible assets. The organization must show crypto assets received as non-cash consideration during the ordinary course of business that are converted nearly immediately into cash as operating cash flows. Regulators are focusing more on crypto holdings in the light of the failure of several cryptocurrency exchanges and the 60% fall in the value of Bitcoin since November 2021. It's difficult to estimate how many companies or public agencies hold crypto assets. Relatively few have, so far, declared their holding, with Tesla being the most famous. However, other estimates suggest that there are 44 million separate holdings of cryptocurrency in the United States, and some proportion of that figure must be businesses. The disclosure rules will mostly affect the cryptocurrency exchanges domiciled in the United States, as well as investment houses with large holdings. The Financial Accounting Standards Board issued an exposure draft in March 2023, which can be accessed on the FASB website at www.fasb.org. Criticisms of the FASB approach. Some responses to the exposure draft requested that further disclosure be required, including information about the cryptographic private key held. This has not happened due to security reasons. There's also been some criticism of the exclusion of crypto assets with enforceable rights to goods or services, NFTs, and other types of digital asset. It's argued that the distinction between assets with enforceable rights and those without is unclear and may provide a loophole for some companies to avoid disclosure. In the interests of issuing a standard sooner rather than later, the FASB decided to continue to exclude assets with enforceable rights. However, it indicated that this was a first step and more research would be conducted, so revisions to the standard in future are a possibility. Positive responses to the FASB approach. The requirement is to report the fair value of their crypto asset holdings. That means the estimated price of the asset that takes into account current market value and other decisive elements. This requirement is expected to increase the volatility in the earnings of companies with large crypto holdings. However, it will allow them to record financial recoveries from increasing crypto prices to better reflect the state of their holdings. The response to the new standard has been positive. Hedge fund manager James Lavish said, "The latest FASB vote opens the door for companies to buy and hold Bitcoin in corporate treasuries without balance sheet penalties." James Lavish continued, "Going forward, if a company buys Bitcoin, they will use a recognized exchange market value to price the asset every quarter, just like a stock, bond, or commodity that trades on the public exchange. Bitcoin goes up, it can be recognized. Bitcoin goes down, it is accounted for. Bitcoin recovers, it is recognized. With this ruling, it's most likely that any profits or losses will then flow through to the income statement and be recognized too." Accounting for and disclosure of crypto assets summary. In summary then, the FASB requires separate disclosure of crypto assets that meet the criteria at fair value with gains or losses recognized. Crypto assets received and immediately turned into cash should be shown as operating cash flows. Michael Saylor, the founder of the software company MicroStrategy, which has a large crypto holding, said that the statement, quote, "eliminates a major impediment to corporate adoption of Bitcoin as a treasury asset," end quote. Let's look now at what's happening in other jurisdictions. Canada. The guidance issued by the Canadian Securities Administrators in 2021 remains the applicable standard for Canadian listed companies. That guidance covers continuous disclosure obligations for reporting issuers, dealing in digital assets, including cryptocurrencies, tokens, stablecoins, and other digital assets relying on blockchain technology. The guidance applies mainly to investment funds, and in summary covers the following issues. 1. Holders of crypto assets are expected to identify controls to protect against theft or loss. Where the assets are kept with a third-party custodian, the holder is expected to ensure such controls are in place. 2. Where crypto assets are held through a trading platform and are therefore at risk from the insolvency or integrity of that platform, the holder must disclose the scale of their exposure and the controls in place to prevent loss. 3. Risk factors relating to the holding of crypto assets must be explained, including the potential for future declines in value or reducing returns. 4. Promotional statements made about crypto assets and any investment offer must be balanced and supported by objective data. 5. Events relating to crypto asset holdings, which might be expected to have a material effect on the market price of the holder's stock or securities, must be disclosed. 6. Where the holder's business is investing in crypto assets, even if it is not technically defined as an investment fund, Canadian investor protections apply. 7. Financial statements must record crypto asset holdings at fair value and must follow guidance issued by the Canadian accounting bodies. In separate requirements issued in June 2023, financial firms must notify the Office of the Superintendent of Financial Institutions if their holding of crypto assets, including cryptocurrencies, exceeds 1% of their total Tier 1 capital. Rules around taking positions in cryptocurrency have also been issued. These rules represent the first time in Canada that financial institutions have been told how to treat cryptocurrency holdings and activities. The website for the Canadian Securities Administrators is shown at the link. Australia. The Australian Securities and Investments Commission, ASIC, issued detailed guidance on crypto assets in 2021. The guidance is available at the link shown. The guidance applies mainly to organizations offering or dealing in crypto assets and essentially says that financial services rules and licensing requirements apply. There are no specific accounting standards in Australia that relate to the disclosure of crypto asset holdings by companies that are not involved in financial services. The need for crypto disclosure in Australia. The issue of the FASB standard in the United States prompted commentary in the accounting press in Australia on the need to provide more regulation for the disclosure of crypto asset holdings. The tax treatment of crypto assets is regulated by the Australian Tax Office, but the Australian Accounting Standards Board is still reviewing its plans for crypto assets. The Journal of the Chartered Practicing Accountants of Australia published an interesting article in September 2023 at the link shown. The European Union. The European Central Bank, which supervises the banking regimes of member states and regulates financial institutions that operate in Europe, issued a standard on the treatment of banks' crypto asset exposure in 2023. This relates to banks and financial institutions operating in Europe. In June 2023, the European Securities and Markets Authority, which regulates the operation of financial markets, including stock exchanges, issued the Markets in Crypto Assets Regulation, MiCA, relating to public offers of crypto assets. European member states apply the IFRS accounting standards, and IAS 38 deals with intangible assets. It was last revised in 2014, and the International Accounting Standards Board is reviewing updated disclosure requirements for crypto assets. The need for crypto disclosure in Europe. The European Financial Reporting Advisory Group, EFRAG, which advises the European Union on financial reporting, issued a discussion paper in 2022. It can be found at the link shown. The EFRAG document recommends a similar approach to the new FASB standard, with crypto assets reported at fair value. As it stands, however, there is no recent guidance on disclosure of crypto asset holdings by organizations that are not involved in financial services or are not offering crypto asset investments to the public. The United Kingdom. Lastly, we visit the United Kingdom. IFRS accounting standards are applied here, as well as in Europe, Canada and Australia, and, as we've seen with those jurisdictions, there are no recent accounting disclosure rules in place, and IAS 38 applies. It's 10 years since IAS 38 was last updated, and it does not provide sufficient detail to be useful for crypto asset reporting. The IASB has noted the need to revise IAS 38, but the timescale for completion of such a project has not been disclosed. In terms of financial services organisations, the UK is following Europe and developing regulations for financial services companies holding or dealing in crypto assets. A consultation paper was issued in February 2023, and regulations will apply to all UK-based providers and all providers with UK customers. For those that are interested, Deloitte have produced an interesting summary of the issues in UK crypto asset regulation at the link shown. In summary, overall then it would seem that the United States is ahead of the game with its new standard on accounting for and disclosure of crypto assets. Countries that apply the IFRS standards are some way behind, although action would seem to be needed soon. Follow the links I've presented to find out more, or research the resources from your professional institute and regulators. Thank you for watching this Quick Insights video. I hope you found it useful and informative. If there are any other topics you think would make an interesting short video, please let us know. I'm Ross Maynard, and I hope you will join me for some other of my videos and courses.